Hello and welcome to the TAP Business School. In this video, we'll be sharing some helpful tax saving tips. As a business, keeping more of your cash means more opportunity for growth and development, so it's important to regularly review your tax efficiency to ensure you're not paying more than you need to. Sideways relief is one of the ways you can do this. This involves offsetting your self-employment losses against other tax that you've paid, such as through employment, in order to claim a tax refund. If your company's working on an innovative new product or service, then make sure you don't miss out on claiming research and development tax credits. This is generally claimed on initiatives such as software development, but can apply to other scientific or technological innovations too. You can claim 230% of your total spend on this to receive a tax repayment, so it's important not to miss out on. Use a mobile phone for work? You can also put this in your company's name without any benefit in kind arising. Those who work from home often forget they can claim for using their home as an office. It's a great way to offset your tax. If you previously chose not to register for VAT, but you've just reached the threshold, there's another great tax-saving tip to be had. It's a little-known fact, but you can reclaim VAT for up to 4 years before you registered on goods and assets which you still own at the date of registration, and 6 months for services. If you're a business which holds a lot of stock, this can be a great way to reduce your first VAT bill. You may even be eligible for a rebate. VAT-registered businesses can also consider moving on to the flat rate scheme, as sometimes this can be much more beneficial. This is where you pay a fixed rate of VAT to HMRC rather than the difference between the VAT you charge to customers and the VAT you pay on purchases. However, using this method means you can't reclaim VAT on most purchases. If you need to invest in equipment or other assets, you can claim up to 100% of the value in year 1. This is called annual investment allowance. Company owners with a spouse who has low or no income can benefit from tax savings too. You can pay them for admin work and reduce your tax by doing so. Everyone needs to save for later in life, right? So don't neglect setting up a pension scheme for you and your employees, as it will reduce your tax bill in the process. There are limits to how much you can save, but there are also considerable benefits for most businesses. And our final tip? If you're a director and shareholder of a limited company, then we highly recommend taking a combination of salary and dividends, which will vastly reduce the amount of income tax you'll pay. Thanks for watching. If you need any more help with reducing your tax bill, please head to our website at www.theaccountancy.co.uk or give us a call using the number on screen.